How much tax do you really pay in France? I see it in the comments, I see it in DMs, I see it in expat forums all over the internet. Someone says they would love to move to France, but they have seen that taxes are 55%, sometimes 60%, and they simply cannot afford to lose more than half their income. And I understand why that number is frightening. But here is what I want to show you today. That number is not wrong, but it is being misread. And the misreading is costing people the move they actually want to make. I am not a tax advisor. Nothing in this video is personal tax advice. What I can give you is the framework to understand what those numbers actually mean, because there are two confusions happening at the same time. And once you understand them, France is going to look very different. Bonjour, I'm Guiga from Expat in France, French by birth, global mobility professional, and I help English-speaking expats make their move to France. If you are planning that move and you want to understand the full picture, not just the taxes, but the visa, the administrative setup, the banking, the social protection system, I have a full relocation program called the France Formula, opening in September 2026. The waitlist is free and is linked in the description. But right now, let's talk about those numbers. Let me start with the 45% figure. It is real, it is not invented. 45% is the top marginal income tax rate in France. But marginal is the word that changes everything. A marginal rate means it applies only to the top slice of your income, the portion above a certain threshold, not all of it. France uses a progressive system. Each band of what you earn is taxed at its own rate. And here is what that looks like for income declared in 2026, which is your 2025 income. So the first 11,600 euros is taxed at 0. The income between 11,601 euro and 29,579 euros is taxed at 11%. The next band, up to 84,577 euros, is taxed at 30%. Then 41% up to 181,917 euros, and only the portion above that number is taxed at 45%. Let me make that concrete. Take someone earning 50k euro a year. They are technically in the 30% bracket. But here is what actually happens. The first 1,100 and 600 euros is taxed at 0. The next slice is taxed at 11%, up to 29,579 euros. So that is 1,979 euro tax. And the remaining portion, up to 50k, is taxed at 30%. That is 6,126 euros. You add all those up and the total income tax bill is approximately 8,100 euro. So on a 50k euro income, that is an effective rate of 16%. Not 30, not 45, 16%. That is the difference between a marginal rate and an effective rate. And it is the first thing that you need to understand. Nobody in France pays 45% on all their income. Under a progressive system, this is simply not possible. And there is something else worth knowing, especially if you are employed in France. The number that actually enter these brackets is not your gross salary. Employees in France automatically receive a 10% flat deduction on their salary income before the tax calculation even begins. A minimum of 495 euros and a maximum of 14,426 for 2025 income. This is automatic. You do not need to claim it or do anything to benefit from it. So on a 50k salary, only 45k actually enters the brackets, which means that 16% effective rate is actually a ceiling, not a floor, for those employed in France. And if you have ever worked in France, you have access to a payslip from a previous stay. And there is a simple way to verify all of this for yourself right now. find the income tax line on that payslip. Divided by your gross monthly salary, multiplied by 100, that percentage is your real effective rate. I promise you it will not be anywhere near 45%. But there is a second thing that makes the French system even more nuanced than the brackets alone suggest. France does not tax you as an individual. It taxes your entire household. And within that household, France uses an income splitting system that divides your income before applying the tax brackets. Here is how the parts work. Each adult is one part. Each of the first two dependent children is half a part. From the third child, each additional child is a full part. So a couple with two children has 3 parts in total. The household's total income is divided by the number of parts, and the brackets are applied to that divided figure. Then the result is multiplied back up. The effect is that families with children pay significantly less income tax than single person on the same gross income. And for couples, even without children, you are already dividing the income by 2 before the brackets apply. Now, who actually qualifies as a household for this purpose? The rules is straightforward. If you are married or in a civil partnership, which in France is called a pax, you file a joint return and your combined income goes through the income splitting system together. If you are living with a partner, but you are neither married nor in a French civil partnership, France treats you as 2 separate individuals and each of you files their own return. The same applies to flatmates, right? Each person files individually. So if you are moving to France with a partner and if you are not married or in a French civil partnership, this system will not apply to you. Each of you will be taxed as a single person. If you are married or in a pax, the income splitting system applies to you immediately. And if you have children on top of that, your effective rate drops further. If you are a couple or a family making this move, your effective income tax rate will be lower than any single person illustration suggests, sometimes significantly lower. And this is worth knowing before you start calculating what France will actually cost you. Let's get to the confusion that I find the most interesting, the one that nobody ever explains clearly. Here is the source of the 55% or 60% figures you see everywhere. And I want to be honest with you, as a French person, when I first encountered this confusion, I genuinely did not understand what was happening. Because in France, these 2 things are completely separate categories. They always have been. The numbers that circulate online combine income tax with social charges. 2 separate categories that France treats as completely different things. In the French understanding, social charges are not the same thing as charges, not even close. Think of it this way. Imagine someone added up your rent, your health insurance premium, and your pension contributions, put them all under one heading called money you lost this month, and told you that was your tax rate. You would say that is absurd because your rent buys you a home, your insurance buys you coverage, your pension contributions are building your future. And that is exactly what is happening when people quote the 55% figure for France. They are combining income tax, which goes to the state, with social contributions, which buys you direct, traceable rights, healthcare reimbursement, retirement pension points, unemployment coverage, maternity and paternity leave. You are not losing that money, you are spending it differently. And in many cases, more efficiently than you would if you were buying those same things privately, but this is another debate. This does not mean France is cheap, it is not. But the mental model, I'm losing 55% of my income to the government, is not accurate. A more accurate model is I'm paying income tax at a progressive rate and separately contributing to a social protection system that covers my healthcare, my retirement, and my family. One more thing worth knowing if you earn investment income in France. France applies a flat tax on investment income, dividends, interest, capital gains. In 2026, that rate is 31.4%, up from 30% previously. And that 31.4% is already the combined figure, and it includes both the income tax portion and the social charges portion. It is not something you add on top of your income tax. It replaces it for that category of income. So if you are receiving investment income in France, 31.4% is your number, not 31.4% plus something else on top. If you want the full picture on setting up your life in France, your visa, your housing, your banking, your insurances, and so much more, the France formula is built exactly for that, explaining France for people who did not grow up with this system. The complete relocation program opens in September 2026. The waitlist is free, 30 seconds, link in the description below. Before I walk through these examples, I need to be very clear again. I am not a tax advisor. What I'm going to show you now are illustrations of the moving parts, not a calculation of your personal tax bill. Your situation will be different. Please, before making any financial decisions about a move to France, consult a qualified French tax professional. With that said, let me show you 3 profiles, because I think seeing the structure is genuinely useful, even if the exact numbers are not mine to give. Scenario A: single remote worker, micro-entrepreneur, services activity. If you are self-employed in France as a micro-entrepreneur, your social contributions are calculated as a percentage of your gross turnover. Not your profit, your turnover. Then, for income tax purposes, the micro-entrepreneur regime applies a flat deduction on that same turnover before the progressive brackets kicks in. In 2026, those deduction rates are 71% for sales activities, 50% for commercial services, and 34% for professional services such as freelancers and consultants. So if you're a freelance consultant and your turnover is 40,000 euros, only 34% of that, this means 13,600 euros, enter the income tax brackets. The rest is deducted before any income tax is calculated. The social contributions and the income tax run in parallel on completely different bases with different rates. They do not stack on top of each other on the same numbers. That alone changes the picture entirely for a lot of people watching this. Now, scenario B: a couple, one partner working remotely, 2 children. In this situation, one partner working, 2 children, you benefit from the income splitting system immediately. 3 parts. Your combined income is divided by 3 before the tax brackets apply, which pulls your effective rate down considerably. Add to the fact that children generate specific family benefits payments through the French family allowance system, which is entirely separate from income tax. And you will likely find that France is significantly more financially manageable than the headline rates suggested when you first read them. Now let's move to scenario 3. High earner, employee above 180,000 euros a year. I want to be honest here. This is where France genuinely is a high tax environment. The 41% and 45% marginal rates start to apply to the top bands of income. The effective rate on your total income remains lower than the marginal rate. That is always true under a progressive system, but at this level, France is among the higher taxing developed countries. If maximizing your take-home income is your primary objective, that is worth factoring into your decision. The quality of life, the healthcare system, and the overall environment may still make it worthwhile for you. But go in with clear eyes. For all 3 of these scenarios, your actual numbers require a tax advisor. What I hope I've shown you is the structure. And the structure is a lot less frightening than a single percentage on a forum. The last thing I want to address is double taxation. France has signed tax treaties with over 125 countries, so for the vast majority of you, double taxation will not be a reality you face. The treaty between France and your home country determines which country taxes which income and generally prevents the same income from being taxed twice. For Americans specifically, the situation is more complex because the US taxes its citizens on worldwide income regardless of where they live. This is unique to the US. However, the foreign tax credit typically eliminates the double tax in practice, because French taxes are generally higher than what the US would charge on the same income. Most Americans living in France who file correctly end up owing zero to the IRS. But I cannot say this strongly enough. If you are American and you are moving to France, you need a tax advisor who specializes in both systems. This is not optional. For everyone else, check the bilateral tax treaty between France and your home country. You can find the full list on impot.gouv.fr or your home country tax website. Do not try to interpret it alone. The language is technical and the implications are significant. So let me give you the honest answer to the questions in the title. France is a higher income tax country than the United States or the United Kingdom. That is true, and it is worth acknowledging clearly. I am not here to pretend otherwise. But the effective rate you will actually pay is significantly lower than the headline figures suggest. For three reasons. First, the rate is progressive. The top rate only applies to the top band of your income. Second, the income splitting system benefits you as a couple or family in a way that individual-based tax systems simply do not. And third, a meaningful portion of what gets called taxes in international comparison is social contribution funding your healthcare, your retirement, and your social protection. Things that in other countries come entirely out of your private after-tax income. Whether that is a good deal for your specific situation, that is not a question this video can answer. It depends on who you are, how you earn, what you currently spend on healthcare and retirement, and what you value. That is a question for a tax advisor and for yourself. What I hope I've given you today is the framework to read those numbers correctly, not to dismiss them, but to understand them. If this video helped you make sense of something you had been seeing online, give it a thumbs up and subscribe if you are not already here. And drop a comment. I genuinely want to know what number did you read about French taxes that nearly put you off the move. I read every single one. The France formula waitlist is still in the description if you want to come back to it. I've linked another video right here that you might want to watch next. Merci et à bientôt!